on the broadcast for the next hour or so. We want to hear from you at home. Drop your questions, your comments, your hot takes. If they're good, we'll put them on the show. If they're bad, we probably won't. Although if they are hilariously bad, we most certainly will put them on. But first, let's bring in our first guest. Sonu Varghese is the chief macro strategist at the Carson Group, here to talk AI earnings and whether this rally still has room to run. My man, welcome.
All right, thank you. Hopefully I'll be hilariously good.
I think, yes, there's no hilariously bad with good guests. I really appreciate you joining us, man.
Absolutely. Nice to be here in New York.
Especially because you don't live in New York.
I'm in Chicago.
You're a Chicago guy. This is also the first time you and I have met.
Yes.
And there aren't many guests I have on the show who I haven't met before, but obviously I know your work.
It's a good risk to take.
So I'm going to start with this. I don't even know if the producers have this. This is from, what is this? How I Learned to Stop Worrying
and Love the Bubble.
Look at this photo. Dr. Strangelove fans want to know, what am I looking at?
That's me on top of a rocket ship.
Of course.
That's me riding the wave, that's us riding the wave. Look, when we started this year in our 2026 Outlook, the title of it is Ride the Wave, but also asterisk, try to avoid a wipeout.
Okay, right, I see that.
That's the other side of it. We are clearly in the middle of something massive here. That's the AI wave. I mean, but at the same time, I think it's also a very macroeconomic story. You take Micron's earnings today, for example, Micron's earnings, Micron's margin expansion is somebody else's inflation. In this case, maybe Apple's inflation. Mm-hmm. Apple raised prices because memory chip prices are going up, right? We got inflation data today. Inflation's hard. It's not just energy or tariffs. It's also AI-related bottlenecks, right? So it is a very macro story. And I think we are in a period of inflationary growth. That's good for the stock market. Not as great for bonds, but that's why we overweight equities.
And that's a real photo, of course.
Well, AI.
Slightly doctored, maybe?
Yeah,
I thought you did that for real.
You thought I was actually on the rocket.
Yeah, of course.
Someday.
If it's on the internet, it's real.
It's real.
Producers, let's pull up chart one here for Sonu. Big tech on track to spend nearly $1 trillion on AI, Sonu. $1 trillion, a million, folks. We're talking about a lot of money. What are we watching as the biggest infrastructure build out? Maybe since the internet. What does this chart tell us here?
It tells us that companies are spending a lot. And every time we get earnings seasons come rolling through, companies tell us, wait a minute, we're spending even more than we told you the last time around. So about 8 months ago, that's the time we were kind of writing our outlook. This is after Q4 earnings, November, December of last year. Companies said, the big hyperscalers, right? Your Microsofts of the world, Amazons. They told us we're going to spend about 1.5% to 2% of GDP, 2026, 2027, on CapEx, AI-related CapEx. Well, Q1 rolls around, Q2 rolls around, earnings season. They tell us, wait a minute, that's wrong. We're going to spend about 2.5% of GDP on CapEx. And one person's investment spending, one company's investment spending is somebody else's profits and revenues.
So skeptics continue to ask, when is all this AI CapEx spending going to pay off? When do you think we might actually see a little bit more substance, a bit more evidence in terms of productivity, overall economic gains here? So this is a lot of money we're throwing around here, man.
Well, that's a picture that I just generated. So there you go.
There you go. Yeah. It all goes to photos of Sonu riding a rocket. I get that.
Right. And videos, right? No, I think the AI demand is right now, for now, it's outstripping supply, which is why prices are rising, right? At some point, and this is from a macro perspective, what am I keeping an eye on, right? One thing is just look at some of the inflation numbers. AI-related spending, because of bottlenecks there, the personal consumption expenditures in index for computers, software products, and tokens for AI, right? That's up 83% annualized over the last 3 months. Once that goes the other side, once that stops going up, it starts falling, that tells me, okay, now supply is outstripping demand, right? We're not there yet.
Producers, let's head on over to chart two. It's kind of AI versus everything else right now. This is an interesting look at momentum nearing the 99th percentile. What does this chart tell you? Why'd you send it over for the show today?
It's telling you that it's AI versus everything else.
Yeah.
For the last 3.5 years, starting in 2023, so ChatGPT, when it was released, about November 2022. Now, that was the end of the bear markets too, October. So ChatGPT came in like boom, right at the perfect moment there.
Good note.
So I look at 2023, it was AI versus everything else. All the AI related stuff did better. 2024, same story. 2025, same story. This year, the broad AI basket is up 45% year to date. And S&P 500 X AI enablers, the Goldman Sachs index, that's up 5%. That tells you what's happening.
Does it support the bull case? Raise a little bit of a caution flag? Maybe a bit of both?
As momentum, so there's another chart I sent over showing you momentum.
Yeah,
so
this is chart 3, producers. Let's pull this one up.
So this is the S&P 500 Momentum Index. 12% of that, JD, is Micron.
Oh my God, what a story!
Right, so you can imagine
this week,
right? And then you have like another 8, 6, 7. It's Nvidia and Google, and then you have SanDisk in there. You have AMD in there. That is up about 37% over the past year. The S&P 500's up about 19, 20%. What's the difference? It's about 17 percentage points. You look back at rolling 1-year periods in history. Where does that stack up? It is about the 95th percentile. You look at rolling 3-year periods. The last 3 years, momentum's exceeded the S&P 500 on an annualized basis by about 20 percentage points. Where does that stack up historically? That is close to the 100th percentile. Now, what is in the 100th percentile usually goes the other way, but it can keep going for a bit. But this is where, as this keeps stretching, the more we feel like we need to diversify. We need to diversify into other parts of the market, right? This is whether it's healthcare, things like financials. Financials are up a lot today. Low volatility stocks. So as momentum goes up, we're like, oh, we need even more diversification.
What are those other parts of the market that you're paying attention to? You just mentioned one. And how do you go about finding the parts of the market that might be a bit underdiscovered right now?
For something that is, you just look at the S&P 500 XAI enablers. But one way we've been playing this, like I said, we're riding the wave with momentum on one side, but we want to avoid the wipeout. So we are barbelling momentum with low volatility. Low volatility is hated right now. You think about staples and things like that. It's not just staples, it's low volatility stocks, even within technology, within industrials, within real estate, within communication services, within financials, all of that. One thing to be careful here is that, you usually diversify outside of tech and say, okay, there's industrials, there's real estate, there's utilities, but AI is flowing through every single corner of the market. Within industrials, there's about 40% of the industrials basket has almost half, 50% correlation with tech. That's not really diversification. So you have to just be careful about, is it actually diversifying or not? And we think low volatility is part of that.
Producers, chart 4, please. All right, AI, more than just technology stocks.
That's the one I
love a good. Okay, so you got that one. Any underappreciated AI beneficiaries right now?
I think international.
Oh, interesting.
Yeah.
Because we hear a lot about real estate.
Yes.
A lot about the power grid. That's a good one. Talk to me more.
We've been neutral international for about over a year now. And it's not like we've ever bought into the sell America trade. But 2023, 2024, we were very overweight the US. We pedal to the metal. We've always overweight equities. We are still. But then last year, after more fiscal spending in places like Germany, even China to an extent, we went, okay, you want to, get at least neutral international, sort of diversifying out of the dollar a little bit. I know the dollar is going up right now a little bit.
Right now, yeah.
But we're neutral international, but at the same time, you have to be careful there. International means there's EM and South Korea and Taiwan too. That's now again AI. So you overweight EM and you're not getting diversified from AI. But if you go to Europe and maybe Japan, that's more interesting with respect to diversification.
Producers, chart 5, please. The market has doubled since 2022. Yeah, and that's wild. We talk about the time with ChatGPT. Yeah. And then it's come back on the profit growth driven by both sales and market expansion. If this rally were genuinely just hype, would these numbers look a little bit different?
No, it gets to your intro. You said, is this real?
Yes.
Right? If it's not real, I mean, what you see in markets, look, profits are real, right? If the market's going up, in a sense, that is real, right? Because people are making money. Now you have to sell out of it to realize the capital gains. But 100% since the end of 2023. So 3.5 years, the market's doubled. 66 percentage points of that has come from profit growth. Only 24 percentage points has come from multiple expansion, about 10 percentage points from dividends, right? What's incredible, that's huge by itself, 66 percentage points. So close to 70% of that return has come from profit growth. You could argue dividends is also profit growth because it's just returning profits to shareholders.
Sure.
So it's the same thing. Now, out of the profit growth piece, about 31 percentage points has come, almost half, has come from margin expansion. That's incredible.
Expansion, right?
Margin expansion. And that gets to what happened in Micron today, coming back to the top, right? one person's margin expansion, one company's margin expansion is also somebody else's inflation.
Aha.
So that's why this is a macro story here.
Producer, we can pull up the Micron chart. What a story MU has been this week. How do you think about these big parabolic moves? Take a slightly deviation away from what we were talking about. But if you look at Micron, how do you mentally approach the SanDisks, the Western Digitals, the Lamb Researches?
Yes.
You and I were having this conversation a year ago. It'd be about silver. When you see these absolutely parabolic moves in your expertise, what goes through your brain that investors at home might benefit from thinking about?
Diversify.
Okay.
We talked about momentum.
Yeah.
And you mentioned Lamb Research is the 5th largest holding in the S&P 500 momentum index.
That's wild. No kidding. Is it really?
Yeah, it's a 5th. Micron's right up there. 5th largest is Lamb, and then just after that you have AMD and SanDisk and all that. So you see that playing out, and we are playing it out honestly in our portfolios by using the S&P 500 momentum index.
So it's interesting. So Micron shares are up about 12% today, but you see the bulls are giving it a little bit of sell pressure. I mean, we're well off our days. Obviously, the market's only been open for whatever, an hour and change, but it's kind of interesting price action more broadly. All right, my man, before I let you go, talk to me about some of the biggest mistakes or misconceptions about this market that you see in chatter on social media. What do you think far too many people still don't quite have right about this market?
I think going back to what we were talking about, obviously there's a lot of hype, and you get that. You need the optimism, but there's something real here. These are actual profits driven by investment spending, driven by stuff that's happening on the ground, driven by data center, investment in data centers. And then you need cables, and you need optical cables, you need networking equipment. These are the companies that are making money. If you mentioned Lamb Research, for example, right? So that is all real. It's happening. Now, the question obviously is, when does it pay off? Well, that's the part. Even I'm uncertain. I don't know. But there are a lot of things I'm watching. For example, is demand outstripping supply? For now, that's happening, right? You look at the macro data as well. So I think it's all connected. But going back to something I said, diversify, right? One thing I'm watching is there a rotation, and is there a sustained rotation? And you think back to the dot-com bubble. How did that end? It didn't end with a crash. For the first 9 months, from March of 2000 at the top, going through the end of 2000, December of 2000, there was actually a rotation. Financials did well. Healthcare did well. Obviously, staples did well, but then it's defensive. So it wasn't risk off. It was rotation.
Right.
If we get rotation for about 6-9 months, then I would say, you know what? The AI story is done.
Oh, interesting. Okay.
That's what I'm watching for.
So you don't necessarily look for tech to always do the heavy lifting. The generals lead the pack. I feel like you want to see that in the
I want to see
market.
that.
Of course.
Because, when you have a good story, a macroeconomic story, not just a market story, you want to see AI lead and tech lead. But if the rotation happens, not just for 2 days or a week, you see it for several months, then I would say, the AI story is done.
Yeah, but also...
But then there's a question of what is the next story?
What is the next story? Yeah, I think the AI legs is really interesting. I mean, it took a while for me to conceptualize industrials. It's such a big AI play, right? And Jay Wood said last week, SpaceX is going to be an industrial stock. Caterpillar, incredible industrial stock, knocking the cover off the ball. The top 1 or 2 best performing Dow stocks so far this year.
Google's coming into the Dow.
Who, next week? Okay, thank you. I didn't even get to work that onto the show. Verizon's out, Google's in.
Yeah.
Good, let me get your take on that before we wrap up the interview. The Dow obviously goes back to 1896. You try and modernize, you try and include some of these tech names. We're now going to have 5 Mag 7 names in the Dow.
Yes, 5 out of
Alphabet will
7.
be the new one. What do you think?
Yes, I think it gets to momentum begets momentum. As one story plays out, and now I would argue the story's been playing out for more than 3 years. Everyone wants a piece of that. Whether it's the S&P 500, which automatically gets a piece of that because it's a market cap weighted index. The Dow is a price weighted index, so you need explicit inclusion, while something else goes out, and that's what we're seeing with Google and Verizon out.
Although ironically, Verizon, as of yesterday, it's still not the least weighted Dow stock by price. Nike is down to $42 a share. So if you have an argument, if you're going just off price weighted, you might be Verizon saying, well, wait a minute. And why am I going when Nike should be the one that's good? I mean, Nike's trading back down to its 2014 levels.
And despite 5 of the Mag 7 being in there, the largest one is Goldman Sachs.
over 1,000 a share.
Yes.
Yeah, Goldman and Caterpillar.
Yes.
You could do a 2-for-1 stock split on the 2 most weighted names in the Dow. They would still be the 2 most weighted names in the Dow. It's a little top heavy right now. Sonu, you've been a terrific guest. Thank you for your patience while it took us a few minutes to get the show started.
Anytime.
Where can people go if they want to see more of your stuff, my man?
It's carsongroup.com/research. I'm on Twitter as well, or X, at Sonu S. Varghese, my last name. So, I'll be on that.
Sonu Varghese of the Carson Group, my man. What a pleasure. Nice to meet
you.
you. Nice to see you.
Likewise.
Enjoy your trip here in New York with your family. Really grateful for your time today.
Thank you very much.
All right, on the other side of a quick break, we got Ryan Dietrich. But first, I sat down with the great Andy Baer just a few days ago on our daily Closing Bell broadcast, taking stock. The one and only Andy Baer, one of my all-time favorites.